All right, good day, guys. It's your boy Joseph here, and it's been a while. It's seriously been a while. I want to apologize to everyone on my that are subscribed to my channel. It has been a while that I posted here, and if you go to my channel now, you discover that this is going to be the first video that is going to be on my channel. If you are watching this when I just uploaded it, then it's going to be the only video that is on my channel. I've unlisted the rest of the videos that are there because they were kind of like combining both my uh, digital marketing life and my forex life together for you guys on this channel, which it became a little bit difficult to do. So as it is now, I'm going to focus only on forex. So if you are ready to trade with me, to learn how I trade, to learn how to better your trading, how to trade consistently, and how to better your trading, then this is the channel that you need to subscribe to and focus with me, guys, because I'm going to be dropping a lot of value for all of you here. Now I'm going to be going straight into my videos. I'm not going to be talking too much. I'm not going to be wasting your time. I'm just going to be giving you, as in dishing you hot value, and let us fix together, guys. So today's video is about my A+ liquidity trading strategy that I've been trading for a while now, that has changed the game for me, guys, and I believe it's going to change the game for you too. If you have been struggling with forex, if you've been like me, because I've been in this game for years, as in this should be my 7th year trading forex. Well, seriously, I've been in this game for years. If you've been like me, I've moved from indicators to from all these Bollinger Bands to all those stuff. See, I've traded almost everything to custom indicator. There's a custom indicator I bought, or simple forex, or what it is. All those ones that those repainting indicators, those arrow, triple arrow, all those stuff. I've traded all those things, and I can tell you that why it works for some, it didn't work for me. You understand? It didn't work for me. To date, I believe it's still working for some people, because there are a lot of people that still chase that. And one thing I'm not going to do on this channel, I'm not going to be bashing other people's trading strategy. I'm not going to be calling them wrong, because nobody is actually wrong in this market. You get, I can be buying and another person will be selling. You get, okay, like for example, some of my students, they will say a market that I'm buying. You get what I'm trying to say? They'll say a market that I'm buying, and then they will make profit, and I will make profit too on the buy. You get, their TP will be where my entry will be, and that's just actually how it is. So without talking too much to it, let us just go into the order of the day, which is the liquidity trading strategy that I said I'm going to be teaching you guys. And there are 3 different models that I've been talking about in this my A+ liquidity trading strategy. Now, if I see my setup form and every other thing plays out, I take it without remorse, without double thinking. You get, it is a rule-based trading strategy. If these rules form, then I take the trade. I don't second guess myself anymore. You get what I'm trying to say? Okay, then the first one is going to be your IDM. IDM means inducement, guys. IDM means inducement, and LQ means liquidity. This the short form of it. And BOS, yes, is break of structure. And if you are not new to forex, you should be able to know what all this means. So the first one is going to be the IDM liquidity, inducement liquidity after the second break of structure. Now what this means is that first of all, we need rules for this strategy to work. There are 3 different rules of how we need a strong high or a strong low. I think I need to add it here. Let me add it here. Rules 1, strong high or low. I think this is gonna waste time. Let me pause this. Alright guys, so I've written the rules out, and I didn't want to waste our time with this video. So as you can see, the rules are very simple. The first thing you want is a strong high or a low. You get, and then the ABC, A, and all those things under there is just like the criteria for the strong high, because it's not all highs that we want. You get what I'm trying to say? It's not all strong high or lows that you want to trade. Remember, this is an A+ liquidity trading strategy, and this strategy, since there are rules to it, it doesn't happen every time, but when it happens, you most times 80 to 95% of the time you will end up with a winning trade, or you end up at break even highest. So this is this is how it's going to be. Sorry. The first rule is that you need a strong high or a strong low. A strong high if you're in a bullish scenario, and a strong low, sorry, a strong high if you're in a bearish scenario, and a strong low if you're in a bullish scenario. Like for this now, let me show you. You need a strong high, and for a strong high to form, this is what you're looking for. For you to consider is a strong high, or consider a low, a strong low, you need that low or that high to sweep liquidity. You need it to break one or multiple structures, and then you need a momentum push to the other side. Now this is just what I'm talking about. Let's say price is going like this, we're having something 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 like this. You get, we need price to break, you understand, sweep this liquidity. Look at it now, there's a sweep of liquidity here, and then after sweeping liquidity, we need price to break one or multiple structures. If it is two, then it's better. You get. Now this is our criteria of a strong high. The first one is we need what? A sweep of liquidity, which we already have here. This is our sweep, a sweep of liquidity, and then we have a break of structure, break of one or multiple structures. This is one. If it is more, then that's better. You get. Break of multiple structures. Let's use this. Now remember, if you have more than one structural break, it is should I say, it is confirmation. It means that the order flow has really changed in that particular direction. And the third criteria is that there should be momentum push to the other side. Momentum push to the other side. That is to say, the move that broke structure, it has to go with momentum. It has to have momentum. It has to be it needs to be, the displacement needs to be strong. It needs to be with power. I don't really know how to explain this, but let me just keep it at momentum. I believe you guys will understand what I mean by momentum push. You need a momentum push to the other side. Now this momentum push to the other side, like one of my boss will say, is the blueprint of the banks. You understand? This is the blueprint that this is where market is going. Remember, if you've been in the trading industry for a while, I believe you know about order blocks and all that. And one of the criteria that they say for order block to form is that momentum push. Now this momentum push is telling you that, okay, a strong high has been formed. You get, this is my strong low now. In this situation, this is my strong low. The first rule of this A+ liquidity trading strategy has been met by creating the strong low. Now the second rule is that there should be what? An inducement or internal range liquidity. You understand? Internal range liquidity or inducement formed close. Now this is not supposed to be closed. It's close to the strong. Let me edit this. Close to the strong high or low. You get what I'm trying to say? Now an internal range liquidity needs to be formed close to the strong high or low. This is my strong high, and then what I'm expecting is something like this. Expecting something like this, a continuation of this. Then price should come here, form a strong high, and then did something like this. So now this is now my what? My liquidity or inducement, internal range liquidity, and this is what I'm going to mark it as. This is my inducement, internal range liquidity. You get what I'm trying to say? Now if you look under this tool, you will see better if there's a fair value gap below or above the inducement. Now if there's a fair value gap below or above the inducement, then that is even better. It means it is more confirmation for my setup. Let's say there's a fair value gap here. You get what I'm trying to say? If there's a fair value gap here, then it means this additional rule. Remember I say better, it means it's optional. It's a little bit optional. It's not a must that it must be there. So better if there's a fair value gap below this inducement, this inducement liquidity. So if it is like this, then the target now, my target now is going to be the external range liquidity, which is going to be this. This is my external range liquidity. That will be my target. You get what I'm trying to say? And then if you have a setup like this, first of all, rule 1, let us name them. Let us name them rule 1, rule 2, and rule 3. Let us name them rule 1, This is rule 2, and this is rule 3. Okay guys, so this is it. So this is it. These are rule 1, rule 2, rule 3. So when these 3 rules appear on the chart, then all you need to do is to come here and set your order. You get now, set your pending order. Now you can set your order in 3 different ways. You can set it with you can set it on the liquidity, then cover the strong high, cover the strong low, sorry, target your external range liquidity. Now this is going to be a 1:89. See the inducement, or should I say the RR, risk to reward, is very low in this situation. It doesn't have to be like this every time, or you get, but you can just target your 1:3 or whatever you want to do it. Another way is for you to target the fair value gap, you get, or you can target the order block. Order block might be here, you can target the order block. Now by using the order block, the possibility of you missing your trade is a lot. You get what I'm trying to say? There's a lot of possibility for you to miss your trade. Or if there's a let's just leave it this way. Me, I prefer using my my fair value gap, or the middle point of my fair value gap. That's what I use. So let me put at the midpoint of this fair value gap. I mostly use the middle point of the fair value gap, and then this is my A plus liquidity trading strategy, guys. This is my A plus liquidity trading strategy, and you look at it now, it is actually very simple. This is still the first one that I'm explaining, the IDM LQ, that is inducement liquidity after the second break of structure. Now this is the first break of structure, and this is the second break of structure. You see, this is the first break of structure, or you can call it change of character. Then this is my second break of structure. You get what I'm trying to say? So when I see something like this, I take my trade. I don't bother about any other, I don't second guess it at all. When I see this, I just place my trade, and then that's it. That is it. Like, that is it. You get what I'm trying to say? That is it. Let me put this up here and see, so that I have room to put this. It's looking as if my IR is small. Why it doesn't used to be small? Okay, so this is it. This is the first model of my A plus trading strategy. Now it's the same thing for the bearish scenario, because this is the bullish scenario. If you look at it, let's see, let me see if I can copy this. If I can copy this and paste it above. Did I do this wrong? Oh no, that's not it. Let's see. Alright, so I'm thinking of trying to turn them upside down, but I don't think it's gonna be possible. Let me just do it again. Up here. Now for the bearish scenario, for my first model, is something like this. You see we have price going up, higher high, higher low, higher high, higher low. Then we have this, we have a break of structure at least 2 different points. We have this inducement liquidity formed, and then we have our target. So this is exactly what I was talking about. As you can see now, this is price has created for us. What our sweep, we have our sweep of liquidity, we have our first break of structure, having our first break of structure, or should I say change of character, and then we have another break of structure. Now if you watch Vertex videos, Vertex investing on YouTube, you see that they have this as one of the entry models too, but this is what they don't really put this as liquidity. They'll just tell you that you can enter here based on this other block here. Now that is not wrong because it works, but from studies and everything, you know that this is your internal range liquidity, because price takes liquidity before it moves forward. Price takes liquidity before it moves forward. All right, so this is just going to be one of the trading models that I'm going to discuss in this video. I don't want this video to be too long, so this is what I'm going to be doing. Let's say there's a fair value gap here. This fair value gap is going to be where I'm going to be putting my sell setup, which is going to be at the middle of the fair value gap. Sorry about that. What's going on? All right, middle, I cover the stop, the high. I can just put it there, or you put it by a few pips, depends on you, whatever you want. And then you target the external range liquidity, and this is exactly what I'm talking about, you guys. This is exactly what I'm talking about. This is an A+ setup. If I see this setup anywhere, I am taking it, because what I'm expecting price to do is to do something simple. I expect price to come back, take out this liquidity, tap me in, and go hit my take profit. It's as simple as that. This is what I'm looking for. This is what I'm expecting for. All right, so now I'm going to show you guys an example. Alright guys, this is an example that happened on Friday, February the 16th, and I'm recording this video on the 18th of February. So this is an example that just happened recently. As you can see, this was a trade. This is a break of structure. You have a sweep of liquidity, a break of 1, 2, but I'll just consider all this one. So this is my chalk, or my change of character, whatever you want to call it, break of structure. This is my sweep of liquidity. This is my sweep, but I don't really mark all those things out on my chart anymore. And then this is the first break, this is the second break. Now remember me, just follow me guys. This is the second break of structure that we have there. This is the first one, second break, and then this is the liquidity point that created. Look at the inducement that is below the liquidity point that was created. And this is my setup, guys. This is my A+ setup. You see, this is what I'm talking about. This is my A+ setup. You see, a sweep of liquidity, you get sweep of liquidity, break of structure, 1, 2, with momentum push to the upside. Rule 1 has been established, rule 1 has been fulfilled. Then we have what? Another break of structure, dropping liquidity with induced fair value gap. Look at this. You see this fair value gap that is here. I have an indicator that marks that fair value gap. Fair value gap below it. What do? I mark out the middle of the fair value gap, place my order, cover the stop loss, and then my target is my rule 3. You get the point. Rule 3 is my target. This is my rule 1, rule 2, rule 3, and then I place my my entry, and then this is it, guys. Let me show you another setup that happened on